You want to talk about the week?
Sure.
All right, let's pull up some slides. Let's talk about the week. I mean, it really did feel like the week is hanging in balance and still could be. I know we just had a big number, but well, let's move to the first slide. So that was the thing of the week. We were basically waiting on this non-farm payroll, and it just came out, and it was a weaker number, soft, showing further softness in the labor market. And look, I know it's counterintuitive. It is. I mean, trust me. But basically, we could see that the market was expecting a weak jobs market so that we could have more rate cuts from the Fed. We've already priced in a 25 basis point rate cut for the SEP meeting. Now it's going to be, you're going to start hearing people talk about it's time for a 50 basis point rate cut or at least, three rate cuts before the end of the year. I'm sure that's going to be the talk going forward, but the market so far is liking this. We'll see how the day ends up.
You did a great job yesterday on macro. Was it not macro money or the what's that? What's after last call?
Overtime.
Overtime. That was good with the macro boys. That was pretty interesting. So, I mean, I like that you guys all three had different takes on this. So, are you on Team Ilya or Team Vecchio? So you think the market's going to turn bearish with this news eventually?
I could see how the market turns bearish with this news. I think it should be positive. You guys know how this macro stuff goes. This is actually one of the things that the market has been driving higher on. The labor market is weak. We already knew that that's the case. We've seen three different things this week that showed that's the case, and so the market's already been moving higher on that. But the truth be told, it's a bad thing if people are not making having as many jobs in the labor market, right? Like that's a bad thing, and it's always a situation where the Fed wants to either cut the Fed's job is to make sure that the unemployment rate isn't too terrible and we don't have too much inflation. And right now we're in the middle, right? And so they have to cut rates when one of those isn't work or move rates around when one of those isn't working. And so in this case, they're going to have to cut rates if the job market is struggling. So sooner or later, the general consensus is going to be like, well, this is not a good reason to cut rates. It just happens. You guys know how it is. This is one of the reasons why Tom hates when we talk about macro stuff.
I do
It's
like
weird.
that segment though. I do like it, and I think a lot of our viewers like it.
Yeah, I think it provides context, everybody likes context to what's happening, right?
Well, what I like about our segment versus the macro stuff that you hear on other networks, and I'm not shaming other networks, but is the fact that like I watched yesterday and there were three different opinions. And it wasn't like everybody's like, well, macro, like you didn't all follow the same this to the beat of the same drum. To Tom's point, these are still just opinions, right? You're looking at macro stuff, but it's still just opinions. And I kind of like that.
I think what really differentiates us is not only do we provide those opinions, we tell you how we are going to trade those opinions, and I think that's
Yes,
the big thing,
correct.
right?
Correct.
Gold is at all-time highs. I have the all-time high from yesterday's close, but I think we're even higher as of right now in
Yeah,
pre-market.
36,
Um,
39 right now.
yeah, so this should be a good thing for gold. Should be a good thing for silver.
Yeah, silver. Somebody was saying silver's higher than gold. I don't have that up right now. Silver is like picking more wings under it than gold. Yeah, 1%. That's pretty big. Silver,
Mhm.
gold, silver,
Mhm.
and gold. Burl Lives was right.
Our lives. Salesforce had earnings this week, and it's been struggling. It's one of the dogs of the Dow. It's the second worst performer, only in front of UNH. And there's talk of fears of AI eating away at software. Who knows if that's actually the case? Google popped big time this week. They avoid the breakup of the antitrust and the fact that they might have to divest Chrome was a worry, but that's gone. Apple ran on that too because Apple still gets to receive money from them being in the having them the preferred browser on the iPhone. And then VIX has kind of fallen off this week. We're reading below 15. If this bullishness continues, we'll see how low VIX goes today.
Yeah, that would
Yeah.
in that.
Are we just going to be in this like if the market just keeps grinding up and the VIX stays here, there's going to be a slow just I feel like Thanksgiving, Christmas, the whole rest of the year is going to be slow. I don't
Yeah,
know.
I mean, so to kind of Vanetta's point and Vecchio's point that this month is typically one of the most volatile months of the year.
Do you guys like pay attention to that, like seasonal stuff?
No, I just like listening to it. I mean, I do enjoy a good Santa Claus rally. I mean, do I listen to it? Yes, but do I put any credence into it? No. Like, do I pare down my bullish positions or take positions off because of volatility, or do I pull them down waiting for the volatility? Not really. It's just something I feel like that's more retro than forward looking for me. I'm not like, okay, well, I'm going to do something. I might look back and be like, oh, they were right. It was a volatile month, but I don't change my positions because of it ever.
I kind of just like rely on my memory of the past. And I think for so long we traded waiting for a down move, waiting for a down move, waiting for a down move, and we would get them infrequently. And I still remember the dates, like August 24th, we had that big down move, but the market rallied back by September expiration. And then I remember being at the zoo one day on September 12th, and we had a down move. And I remember calling Liz, like, I'm at the zoo, but look at the market. It's down. But then the market rallied back. So in our history of trading, we've had some down moves, but then we get these quick bounce backs. So I don't play for that anymore, Jamal, like I used to.
For those listening, Jenny's talking about August 24th, 2015. I remember that date very well. I lost a lot of money that day. I lost a lot of money that day. Let's move ahead to the next slide. I was trading on my own too. That day sucked.
Hurt. Yeah. You always remember the dates when it hurts.
Oh yeah, for sure. I got another memory later in later in the presentation I talked about. Gold, obviously, big performer on the year. I just thought it was interesting looking at gold, looking at SPX, SPOOs, whatever, TLT, long-term bonds, and the dollar. I mean, you can see what kind of year it's been for all four of these. Kind of fascinating.
Bonds are having a huge move right now. The bonds just hit across the 116 level.
I know.
No kidding. Oh, they're up big. Wow, I didn't check them.
And we all wait for a little, dip down so we could get back in. But I don't know. Do you know anyone who's still in now up at this level?
I mean, no tasty trader I know, because I think everybody that we know is like 13, 15, 13, 15, 13, 15, and bouncing in between. At the 16 handle, I'm out.
I know.
Yeah.
It's tough.
That's pretty amazing. I mean, yeah, I know. It was 113 early in the week, wasn't it? To start the week.
Yeah.
Right?
We'll always dip a toe in the water at 113, and then we get out at 115. So we were just kind of competing. I was hoping for a little bit of a pullback to get back in, but
like for those of you who trade TLT for like a smaller scale position, that's almost back to 90. It's over 88 now. So we haven't seen that level in a while. Mm-hmm.
I think. Oh no, I'll talk about this. Let's move to the next slide. Here. Okay, so more steepening. I think it even moved higher today. I think I saw it was like 65 basis points. This is going to run a little bit, right? Because 2 years are falling for the most part, especially if we're talking rate cuts, and then people are already trying to talk about 50 basis point rate cuts. This is going to steepen more, and should be good for banks. It should be good for home builders. That's actually the area I want to put some trades on and going forward, because I mean, theoretically, this should be good for those areas of the market.
So what would you be doing with this? Like, what would Jamal put on as a trade for this?
What's crazy? I've been on the zebra kick recently. I really have. And you guys, I know. Now I'm not sure if I'm doing them right. And by right, I mean like in the right term. I'm actually going further out, because look, when you do macro, the idea of macro, right? Like this is actually true. Banks borrow at the short end and they lend at the long end. When they're lending you a house, it's 30-year yield versus you giving them money in a CD at 2-year yield, right? So yeah, naturally, this is going to be good for banks. Banks automatically make money in that way. And so I want to be long banks. And so I want to get long a zebra. But I want to go out to like November, honestly, December, because
that's not too far. I've got some zebras out in January.
Okay, exactly. I've just been on such a kick. You know how they go? Sometimes you just get on a kick for a strategy. Oh my God, I've just been.
They're amazing. And then do you ratchet them up too? So if you get the move you're looking for, you can just keep closing and reestablishing, and then you still have the unlimited profit potential and you have zero risk.
Yeah, exactly. I did that yesterday in a couple of long-term, and some in my long-term account. I did that yesterday. UNH was one of them. So I did UNH. I think I told you guys this. I did UNH a month ago, right? And that was, I had it at the 220, 230 strikes. It's upwards of 300 now. I just re-rolled it and moved it further out yesterday in a long-term account.
Yeah, that's awesome.
Let's move to the next slide. So yeah, to answer your question, I mean, I'm getting long deltas, and it's mostly through zebras. Is basically what I'm doing.
Sometimes if there's like news coming out, or you don't want the that much risk on, I'll take my longer term, take them off, and then move it to a shorter term, because they're much cheaper. You could take in a big credit to move them longer term to shorter term, and that way, if there's an event coming up and you're worried about event risk, you've got less at risk by moving them a little shorter term, and then after the event, you could put them back out.
True. Yeah, very good point. You guys are down at the SIBO all the time. I was about to say every day. I know it's not every. It feels like every day at this point.
Tuesday and Wednesday, every Tuesday and Wednesday, live from the SIBO.
There it is. SPX zero DTE volume. I mean, it's just through the roof. It's up quite a bit year over year. It's about 70% or so year over year. I mean, this is a lot. Everybody's trading them clearly.
And you can see it. You can see the volume and the big volume that's going up. So when we're down there, we try to take a look at like the big trades, the unusual activity that's going through. And a lot of times most of it's in the 0DTs.
Right.
Yeah. I trade maybe one a week. I mean, I think that's the thing. Like, I don't feel the need to put a ton of capital towards there, right? I think we talk about 45-day window. We talk about where we sell a lot of volatility, but we also have some trades even further out every now and again. I think you need to have your capital. You don't want to have too much capital in front, right? And I know everybody probably sees this as like, oh, cool, this is where I should be at and all of that. But I think you just got to be, you got to have. I don't want to know the number, but it could be probably 5% of your capital in the near term in 0DT. You don't have too much there.
So I don't look at it as a percentage of it. I kind of agree with you. I don't have too much in there because no matter what, because it's cheaper to define your risk, the capital is never that much in the front month because no matter what I'm doing, I'm defining my risk because you can. It's cheaper too. So that's just it, is I don't look at it as a percentage. But I will tell you, these things are pretty enticing to newer traders that are getting in because they see the instant gratification within like a day or two.
Mm-hmm. Yeah. Let's move to the last slide.
Did we just drop Jenny?
I know. I think she's gone. It's just you and me.
She just left.
She'll be back. Kraft Heinz calls it quits a decade after merging. So they're splitting into two publicly traded companies, one for snacks, one for sauces. Kraft Heinz, I said earlier I was going to have a story. Kraft Heinz, man, I had some Kraft calls. This is when I was trading. This is actually 2015 too. This is 10 years ago. Interesting. I used to like this strategy of things that were really low on the RSI, and really big names, right? Like really like names in the Dow, et cetera, like things that weren't going to drop 30% in a day, but over time might fall. They're low on the RSI. I would look for like 3 months out and buy some calls. And Kraft, I had some calls, but it was Kraft, kind of slow moving, right?
Oh, it's like a tanker. It's a slow moving vehicle.
For sure. And so I had these I had these like 3 month out calls. It was boring. It wasn't really moving. This is the one that wasn't working out of my 10. Like there were two that weren't working. This is one of them. I said the hell with it. I closed it. I usually close things most of the time towards the end of the day. I closed the calls out one day. The very like 10, 15 minutes later after the close, news comes out. They're being bought by Warren G. I mean, Warren G. I always say Warren G.
Worst. How bad is that? When you throw in the towel, I think that hurts worse than staying in a trade and closing it and then the move comes that you're looking for that you've been holding on for dear life. That's the worst.
I had like a 50 lot of calls, Liz. The stock ended up jumping like a whole bunch. I mean, I missed out on like a 50 grand trade. I was so I was so mad. I was so mad. I always remember that about this merger. AVGO had earnings reported 63% jump in AI revenue as they beat estimates. Sportsbook CEOs are expecting a record year for NFL. They're expecting it to grow by 8.5% to 30 billion. So look at your DraftKings Flutter. We had a big game last night. Apple's supposed to hold an event this week for their new iPhone products on September 9th. And then we got PPI and CPI this coming week as well. We'll see what those yield. Again,
I don't know PPI and CPI this week. So they're going to be on Wednesday, right? Tuesday and Wednesday? Usually
Wednesday and Thursday this time around, I think.
Okay.
Yeah. So again, we already know inflation is high, but we'll see how the market takes that. And then research, September 2nd, the OJ, 5 Ways to Short a Trade is really interesting. Check it out.
Did you do anything in Broadcom, or have you been trading a lot of earnings trades? Do you trade earnings trades?
I do. I usually do. I usually kind of try. I usually just try to stick to just one way, unless it's a name that I really think there's something going on in. I honestly should have gotten. I usually do these calendar spreads, and I usually do calendar call spreads. I had one on. I had some on in Lulu. Obviously, Lulu went to the downside. I don't know what I was thinking. I mean, it was almost like easy to determine they were going to fall because it's just not a good situation for them.
In Lulu, when you looked at that, when I looked at it yesterday, the calls, there was such call skew in Lulu, it wasn't even funny. So
true.
If you're not subscribed, subscribe right here. And if you want to meet me and the team in person at our next live event, hit the link at the top of the description.